Welcome to Invest Education Hub. Today, we are tackling one of the biggest, most emotional, and most expensive questions you will ever face in your life. When is the right time to buy a house? Now, for generations, the answer to this seemed, well, pretty obvious. It was just what you did. But today, the entire rulebook has been thrown out the window, and we're going to figure out why. I want to kick things off with this quote, because it just cuts right through all that old, conventional wisdom we've all heard a million times. I mean, one of the worst pieces of advice? That's a really bold statement. It forces us to stop and ask a serious question. Is the very foundation of the American dream, the dream of homeownership, actually built on sand? And if it is, what in the world are we supposed to be doing instead?
So here's our game plan. We're going to start by looking at that old rule book, the one our parents followed. And we're going to see exactly why it's broken. Then we'll dive headfirst into the new economic reality we're all facing. After that, we'll unpack the huge rent versus buy debate. And then, and this is the most important part, we're going to shift focus to what truly matters, your life. We'll wrap it all up with a modern playbook, a new set of rules to help you make the right decision for you.
All right, let's start by rewinding the clock a bit. Let's talk about that traditional path, the one our parents and grandparents walked, where owning a home wasn't just a financial goal, it was pretty much the financial goal.
The playbook was just so simple, wasn't it? It was a three-step plan to success. This was seen as the primary way to build wealth. It was this amazing forced savings account that helped you build a nest egg, and it was the absolute cornerstone of a stable, successful life. For decades, this was an undisputed, unquestioned path. But here's the thing. The map has changed, and the landscape is totally different now.
That's because the world we live in today is just fundamentally drastically different. That simple old-school formula is colliding head-on with a much more complex and frankly difficult economic reality.
Just look at this number. In 1950, more than half, over 50% of all 30-year-olds in the country had a mortgage. They were homeowners. Today, that number has completely collapsed to just 12%. This isn't just a small dip, this is a massive, seismic generational shift. So the big question is, what on earth is going on?
A huge piece of the puzzle is something called currency debasement. Now that sounds complicated, but the idea is actually pretty simple. Imagine you have a coffee mug and I have a piece of paper. We trade. Fair enough. But what if I suddenly have a printing press and I can print 1 billion pieces of paper? Your mug didn't become more valuable, my paper just became worthless. The same thing is happening with our money. It's not necessarily that the house is becoming more valuable, it's that it takes way more of our less valuable dollars to buy it. This makes trying to buy a scarce asset, like a piece of property, incredibly difficult.
And this right here, this is the trap. This chart shows the whole story. Our salaries, our wages, they're climbing a small hill, maybe growing at about 3% a year if we're lucky. But the cost of the things we want to own, assets like houses or stocks, they're on an absolute rocket ship, growing at 12% or even more. That gap between what we earn and what it costs to buy a home, it's not just big, it's getting wider every single year. It feels like we're running on a treadmill that's constantly speeding up.
So, this new reality brings us smack into the middle of the great debate. For maybe the first time in modern history, renting isn't just something you do because you can't afford to buy. No, now it's being seen as a legitimate strategic financial choice. It's a real tug of war.
Okay, so let's really break down the arguments. Let's put these two head to head. In the renting corner, you've got freedom. You have flexibility to move, you have liquidity because your cash isn't tied up in a house, and you have zero surprise repair bills. No leaky roof is your problem. Plus, in theory, you can take all the money you would have spent on a down payment, on property taxes, on maintenance, and invest it. Now in the buying corner, the argument is all about building equity. It's a forced savings plan. A piece of your payment every single month goes back to you, building your net worth. And of course, you get the potential benefit if the property's value goes up over time.
And here's the heavyweight statistic, the knockout punch for the buying corner. Homeowners have a median net worth that is 40 times, not 40%, 40 times greater than that of renters. I mean, wow, that is a staggering, unbelievable number. It seems like it ends the debate right there, doesn't it? Case closed, buying wins. But as you've probably guessed, it's just not that simple.
So we have to talk about this crucial point. We have to ask, does owning a home make you wealthy? Or is it that people who are already financially disciplined, who are already saving and planning and are on a path to wealth, are those the people who are more likely to buy a home in the first place? You see the difference? Homeownership might be a result of good financial habits, not the actual cause of them. It's a classic chicken or the egg situation.
And what about that whole idea of your mortgage being a piggy bank? You know, that every payment is like putting money in the bank for yourself? Well, it's mostly an illusion, especially in the beginning. Banks are smart. They structure loans to front-load the interest. That means for the first 2 decades of a 30-year loan, for 20 years, most of your payment isn't building your wealth. It's going straight into the banker's pocket as pure profit. It's not until around year 21 that the scale finally tips and more of your payment starts working for you.
This all helps explain a really fascinating new trend. Get this, the number of millionaires who choose to rent has actually tripled in just the last few years. These are people who could easily buy any house they want, but they are actively choosing to rent. Why? Because they're prioritizing that flexibility we talked about. They want their cash liquid, so they can invest it. They want to avoid the hassles and headaches of ownership, and they're sidestepping the soaring costs of property tax and insurance in major cities. For them, renting has become a strategic choice, not just a necessity.
But honestly, all of this financial analysis, all these numbers and charts, they kind of miss the most important point of all. Because the decision to buy a home, when you really get down to it, it's ultimately about timing your life, not about trying to time the market.
This quote from real estate expert Jeb Smith really just reframes the whole discussion perfectly. Trying to perfectly time interest rates and home prices is a fool's errand. It's pure speculation. You'll drive yourself crazy. The real question you should be asking isn't, is the market ready for me? The real question is, am I ready for the market?
So how do you know if you're ready? Let's get practical. You can use this simple framework I'm calling the stability test. Be honest with yourself. First, job stability. Is your career path pretty secure? Second, income stability. Is your income reliable and consistent? Third, and this is a big one, relationship stability. If you have a partner, are you both completely aligned on your future together? And finally, the long-term horizon. Do you genuinely see yourself staying put in that location for the long haul? Because a home is an anchor, and if you're not ready to stay anchored for at least 5 and ideally 10 years, you could actually lose a lot of money when you go to sell.
This right here is the key mindset shift you need to make. Your primary residence, the place you live, it is not a stock to be day traded for a quick profit. The real superpower of buying a home is something else entirely. It's locking in your single biggest monthly expense for the next 30 years. Think about it. While your friends' rents are guaranteed to rise year after year after year, your principal and interest payment is fixed. That is an incredibly powerful form of financial security.
Okay, let's bring all of this together. Let's build our modern playbook. We've torn down the old rules. We've seen why they don't work anymore. So now let's build a new framework that's based on asking the right questions, the smart questions.
Here it is, your final decision checklist. Number 1, can you truly, comfortably afford the monthly payment right now as is? Don't bank on rates falling to save you. Number 2, do you have a separate emergency fund saved up that's not your down payment? Because trust me, the water heater will break. Number 3, did you honestly pass the stability test we just went through? Be real with yourself. And finally, number 4, what is your true motive? Are you buying for long-term personal security, or are you just speculating, hoping to make a quick buck?
So I want to leave you with this one final crucial question to think about. What are you actually chasing? Is the goal a house, or is the real goal financial freedom? A house is a wonderful thing. It could be an amazing part of a happy life, but it is just one tool in the toolbox. It's not the only path to building wealth, and for some people, in some situations, it might not be the right path at all. The real goal isn't the house itself. It's the freedom, the security, and the stability it's supposed to represent. And the good news is, today, there are more ways than ever to get there. Thanks so much for watching. If you found this helpful, please do us a huge favor and hit that like button, and be sure to subscribe to Invest Education Hub so you don't miss our next deep dive. See you next time.